Hi everyone, George here, and I'd like to make a short video about the 2024 federal budget, and in particular pay attention to, well, specifically about the capital gains inclusion rate and the capital gains uh, changes. So the media is all in an uproar about only one change, and let me center. This is This is the tax explanation to the tax changes. I'll give a link to the document below. It's a readily publicly available document issued by the federal government. So it explains all the tax changes. And as you can see, there are a lot of changes, but what the media has paid attention to is the capital gains. So I just want to go over it a bit and shed more light on it. Because as you can see, and I love this. I love the Edge browser because it gives me the ability to annotate and draw, and we'll do something in red. Um, so basically, what the media has focused on. Well, let's get that thing. Okay. So what the media is focused on is page 7, or the capital gains inclusion rate. However, there are two other changes that nobody talks about. And the first one is the lifetime capital gains exemption. And as you can see, when we get to page 6, this has actually been increased. And this is something new, the Canadian Entrepreneurs Incentive. So now, technically, you would think that, hey, what are the doctors complaining about? Um, the Canadian doctors are entrepreneurs. Technically, they are self-employed. They bill the government for their services. They create an income statement. They are the employers of the secretary in the front, not the government. So what are they complaining about? Well, you'll see. And I'm not going to go over the entire budget. I'd love to, but I don't have time. Um, just to give you a little bit of a footnote or a side note, the volunteer firefighters and search and rescue volunteers tax credit has increased from 3,000 to 6,000 as a non-refundable tax credit. And it's a bit involved as to how that works, but the focus, my principal focus is, or exclusive focus is this. So let's turn to page 6 and go over what these changes entails, and then we'll look at page 7. And by the way, at the time of recording this video, this is being introduced as a separate bill from the budget um, for one reason or another. And the other thing that's important that touches on capital gains indirectly is that finally the federal government has woken up and smelled the coffee with respect to crypto asset reporting framework and the common reporting standard, withholding for non-resident service providers. That's a different thing. Okay, so international tax measures, but it does affect also the T1, especially that's personal tax. That's especially if you are into crypto assets. And in another video that I created on my previous channel, I spoke about how uh, engaging in crypto transactions can either result in capital gain or business income. So at the time of recording that video, the federal government was just getting its feet wet, actually, with how to tax crypto assets. So we're going to briefly look over that as well. So with no further ado, let's go to page 6 and see what the federal government is looking to change in its entirety with respect to capital gains. So here it is in bold black and white writing. The lifetime capital exemption is now going to increase. So the amount of the lifetime capital gains exemption is 1,016,836 in 2024 and is indexed to inflation. As of June 25th, 2024, Um, they're going to increase the lifetime capital gains exemption to 1.25 million of capital gains, and stop the indexation of that amount until 2026. And what happens in 2026, we'll see. That's supposed to be 1 year after the the so-called election that we're supposed to have in November 2025. And the reason why I'm laughing is it's a long way to forget that what that destination is called in the song. It's a long way to Piccadilly. I don't know, but between then and now, who knows what's going to happen. But again, everybody has seemed to have overlooked this 1.25 million uh, amount, and basically, in order to qualify for this capital gain exemption, you have to have a small business corporation or a qualified farm or fishing property. And basically, what this is it's defined by a certain amount of income, and that corporation has to be a Canadian corporation. And there are rules with respect to that. Very readily available information in the capital gains guide. I'm not going to go over it, but this is item number one that's overlooked in the media for one reason or another. It has not been sensationalized at all. Now, here's the interesting thingamajiggy change that was introduced by Ms. Freeland. It's the Canadian Entrepreneurs Incentive. So the 2024 budget proposes to introduce the Canadian Entrepreneurs Incentive, which means they'll keep the inclusion rate at 50% and up to $2 million over the individual's lifetime. So the lifetime limit would be phased in increments of $200,000 per year beginning January 1st, 2025, before ultimately reaching a value of $2 million by the end of January 1st, 2034. The 2/3 capital gains inclusion rate proposed in Budget 2024 would not apply. Instead, we would be able to include capital gains of that nature at 50%. This is where that is said. Now you might ask yourselves, well, most doctors would probably fall into this category. And look, what they're saying here is, hey, we still have the 50% inclusion rate for you. So what are you worried about? Well, remember I said previously that in order to qualify for this capital gains exemption, you have to have a certain type of corporation. First and foremost, it has to be Canadian and Canadian controlled. This is where they allude to that here. However, it does exclude certain corporations. And here's where the doctors are up in arms. Operating in the financial, insurance, real estate, food and accommodation, art, recreation, and entertainment sector, or providing consulting or personal care services. I think that's what the doctors are up in arms about. It does exclude certain corporations. Now, what do you have against a hotel or a restaurant in Banff or a restaurant anywhere in Canada? What do you have against people operating and operating a real estate business? So if you are a provider of rental services and you're buying and selling certain rental property that includes rents, you wouldn't qualify for this reduced inclusion rate. You would have to pay at 67%, or include capital gains at 67%, not pay. Okay, coming into force, and this is really what everybody's in an uproar about. And at the time of recording this video, there have been professional corporations that wrote to Minister Freeland saying that this is really not a change that will add to generational fairness. As a matter of fact, it will detrimentally affect people that are young, because let's say, face it, at my age, we're supposed to be more conservative in our investments, and at a younger age, you're supposed to be more speculative. You can afford to speculate on um, uh, more risky investments because you'll have the time to recuperate that loss. So you would be able to throw money in the direction of quantum computing, AI, and solar energy, renewable energy. That at the moment they are speculative because compared to proven technologies that rely on fossil fuels, they're not there yet. So basically, what we're telling the younger people here, according to this, is that, well, if you take your hard earned money and put it into an investment that is speculative in terms of quantum computing, AI, and solar renewable energy that is not as established uh, as uh, as more carbon related technology, you will have to pay considerably more than you would otherwise have before this budget. Take my advice with a grain of salt. I'm neither an accountant or a lawyer. I just have a quarter of a century, a little bit more than a quarter of a century in preparing income tax returns and making sure that a software works, a widely known software works as intended and whatnot. So here you have the $250,000 threshold, after which you'll be taxed at 67% of the capital gain as opposed to 50. Anywho, I just threw in my 2 cents. And now the last thing I mentioned, and I would like to go over, and it's a 12-minute video, but let's face it, after 5 minutes, people lose attention to this boring stuff. Um, let's go to the uh, an overview of the crypto changes. So I just jumped ahead to page 37 of the tax measures document. And as you can see, under international tax measures, they have a heading called Crypto Asset Reporting Framework and a Common Reporting Standard. So what does that mean? What that means is as members of the Organization of Economic Cooperation and Development, which is an international body that develops certain standards that everybody upholds that are members of this organization. And it's a good thing that this organization exists because let's take a close to home example. You have the United States, Canada, and Mexico in very close proximity. And in order to conduct business across the border, you need to know how your transactions are going to be taxed in the other country. And conversely, people that want to invest in Canada will have an idea of what to expect coming to Canada. That's how the civilized world works. And how these standards are developed is they take professionals like accountants, economists, they examine the problem and come up with a common solution. A one-size-fits-all solution where there's transparency between one entity and the other. So basically, the OECD has come up with a method of taxing crypto assets, and it's called CRS for short, um, the Common Reporting Standard for crypto assets. And I'm not going to go into too much detail about that. Um, so the framework that has been established is actually called Crypto Asset Reporting Framework. Um, and the federal government has opted to uh, to conform to this measure. Let's go over the key point here. Crypto asset service providers would be required to report to the Canadian Revenue Agency in respect to each customer and respect to each crypto asset the annual value of exchanges between the crypto asset and fiat currencies, changes to other crypto assets, and transfers of the crypto asset, including the requirement to report information in respect to the a customer of a merchant where the crypto asset service provider processes payments on behalf of the merchant, and the customer has crypto assets to the merchant in exchange for goods and services with a value exceeding $50,000 US. So basically what that means is if you're dealing with a crypto provider or uh, a crypto exchange, these folks here would have to report your transactions to the CRA, and you should be as well. And there is a method now to their madness as opposed to having a free for all or some guidance that has been improvised by the CRA at the last end of the thing. So basically, what the main takeaway for here is be mindful of your transactions, report them because the CRA is getting the gist of it. Now, having said that, I've been seeing or watching on YouTube or coming across, I actually cannot say I've been watching. I've been coming across certain channels on YouTube where people are saying people are leaving Canada and people should leave Canada and go to places like Dubai, Albania, Bulgaria, and what have you, because there are places where you are more free. Um, from my perspective, going to such a place where you are more free would entail that organized crime is also more free as well, among other things. And I'm not saying this to discredit other jurisdictions or other national entities. I've spoken to people that have come from such countries where they say, you know, we came to Canada because our justice system and way of life and not having to worried about your quality of life is better here than anywhere else. I've lived in Canada for a good part of my life, if not all of it, practically all of it, yeah, if all of it, and I wouldn't give up Canada for um, any other place in the world. Canada is a great and strong country, and it takes a lot more than a Trudeau to destroy it. Um, that's my feeling of it, and I worked in expat taxation to make sure that people from abroad come to Canada in a way that is seamless, and so they can adopt to the country and provide us with their specialized services. Conversely, I was also indirectly involved in helping Canadians work abroad um, and be taxed equally to their colleagues that were in Canada. And I can tell you that's a big effort. It takes a lot of professionals, and it is a costly endeavor. Um, However, we were able to do it. But some of the folks that are peddling this service on the internet are not cut up to it, and they're a bunch of lackeys, for lack of a better word for it. So do be careful, and don't be intimidated by this. It might go away. Things change, and sometimes they do change for the better, not always for the worse. With that said, I conclude this video. I hope you enjoyed it, and I gave you a better perspective of what entails capital gains and the capital gains changes. Have a great summer. I'll probably see you before then, and be well. Take care.